Hello everyone and welcome to my channel. This is Random Guy on YouTube. Today I will be talking about Stride Incorporated. Stride is an US-based for-profit education company that provides online and blended education programs. Stride is a small-sized business with a market cap of $1.4 billion and trades under the ticker symbol LRN on New York Stock Exchange. I borrowed some slides from the latest investor presentation here. Stride's product line includes courses for pre-K, elementary, middle and high school grades, online learning platforms and educational software. Stride used to be known as K-12 and the education from pre-K to 12th grade used to make up the core of the business. In 2020 they bought computer coding camp called Tech Elevator and software engineering bootcamp Galvanize. Don't ask me what is the difference between them. They also acquired MedCerts, which is an online healthcare career training program. Tallo is an online platform that connects talented students with colleges and companies. In the last few years, revenue is growing decently and the cost of goods and expenses are growing accordingly, nothing extraordinary. The business seemed to be relatively scalable. Profits picked up quite a bit in the last few years and Stride became a cash machine. The last quarter was unfortunately negative, but that is mostly seasonal. By the way, this is the Q1 of the 2023. This company has fiscal year shifted a little bit, probably to be more in line with the school year. Currently, we are waiting for the results of Q2, which should be published on Tuesday, at least according to Yahoo Finance. So Q1 is always the worst quarter in the year. From the quarterly revenue graph, you can see quite consistent growth for many years. In 2020, the company made some acquisitions, which I already mentioned, and there was also inflow of new customers because of COVID, so there is no point in modeling that. However, I put an exponential curve, so the revenue of the last 2 years and the average organic growth is about 9% year over year. Not bad for an education company. To account for seasonality and share dilution, I put diluted 12 months trailing earnings per share into the graph. You can see that the profitability growth started somewhere in 2015 or 16. Since then, the profitability picked up, and during this time, the company navigated successfully through all kinds of economic conditions. General education accounts for majority of the revenue, but the career learning is also very significant. The growth in career learning more than makes up for the decline in general education. Same goes for new enrollments. After the COVID pandemic, there was a wave of kids going back to school and outflows from online learning. However, at the last earnings call, the management suggested that they are seeing signs of bottoming of enrollments for general education that could become a nice tailwind for the future. On the last earnings call, the management also reiterated the previously stated outlook for 2025. The 2022 revenues are about $1.69 billion and the midpoint guidance for 2023 is $1.75 billion, which makes about 3.6% growth. Midpoint of 2025 is $2.05 billion, which makes about 21% growth in 3 years, or an average growth of 6.6% year over year. However, the fun part comes from the income growth. Stride generally keeps about 2/3 of the operating income in the net income. Let's assume this will continue. In 2022, the company made about $156 million in operating income. The midpoint of 2023 guidance is 175 million, which makes 12% income growth. And the midpoint of 2025 guidance is $300 million, which makes 92% growth in 3 years, or an average growth of 24% in earnings. This would make up the EPS in 2025 around $4.84 and PE of 6.6. So, what is the fair PE for the company? I don't know, but historical average seemed to be perhaps somewhere around 30. The current PE is about 15. The last time the company traded at 15 was in 2016, and you can see what happened to the share price since then. Now let's look at the balance sheet. The company has plenty of current assets compared to current liabilities, so they shouldn't be in any trouble short term. Long-term debt is, however, relatively big for such a small company. This is manageable, but I would like to see the company to use future cash flow for repaying some debt, especially in this economic environment. Now to summarize. Stride has a proven secular revenue growth. Income is expected to grow 20% plus in the next few years. Current PE multiple of 15 is historically very low. And Stride is a company operating in education industry which is generally considered to be a defensive sector, somewhat protected from recession. Now let's go to the portfolio update. Since the last week there was quite a bit of volatility in the markets. Overall the S&P declined slightly and Nasdaq went slightly up. My portfolio gains stayed almost the same. Today I am adding 100 virtual dollars into S&P, Nasdaq and my portfolio. And to my portfolio I am adding 3.12 shares of LRN at the Friday's closing price of $32.08. Let me remind you that I am not a financial advisor and none of the content of this video is a financial advice. Full disclosure, I do own Exelixis, PagSeguro, InMode and Stride in my real stock portfolio. Thank you for your attention and see you next week.